Mathieu Chabran, TIKEHAU. Welcome back to an in-person event at IPEM here in Paris. How does it feel to be meeting peers, colleagues in person again after such a long time in the virtual format?
Isn't it great? I mean, look at that. You've got 2,000, 3,000 people. People are queuing outside, to get in. For me, that's, and thanks to IPEM, by the way, to Antoine Colson, all the team, getting all the industry back together. And the intensity that we can feel, this morning, for me is a strong highlight that how much, being digital, being virtual, could be very helpful in the tough times we went through. People want to get back together. So I feel extremely happy to be there, and thanks for having this chat.
Great, well, thanks for talking to me. You've just done your panel. I just want to ask you a bit of a general question, really. I mean, what are you seeing in European markets at the moment? Are they busy? Are you excited? A little bit nervous about a few things? Give me your sense.
The European market, I would say the whole private markets are getting increasingly busy. And that's true, in Europe, in the US, even growing in Asia. And I think that's a major structural trend that our industry is going through. And look at, here at IPEM, it used to be very much private equity, and today you're expanding across the private market asset classes. So from private credit, real assets, obviously private equity, with all the growth equity that are more and more required, particularly, at the end of this pandemic, where we see that in Europe, for example, many companies are still undercapitalized. There is plenty of room and opportunity for those strategies. And on the other hand, from the investors and LP side, in this lower for longer environment, people have to diversify, to allocate elsewhere, and private market, is certainly a great opportunity.
Okay, so against that dynamic then, what's really exciting you in your business? What are the sort of areas where you think, I really want to be involved in this, I want to see this one through?
There is, if you look at TIKEHAU, and we cover, the private credit, private equity, real assets, even the capital market strategies. If I look at the private equity side, and we're not active in controlled buyout, and we could maybe discuss, valuation, where people have, question marks. But if you look at what I would call the growth equity, the expansion capital, that is all the more required coming out of this pandemic. As I was saying, some companies, family-owned, entrepreneurs-led, could realize that they were slightly undercapitalized. They don't want to sell their business. They want to reinforce their balance sheet. They want to strengthen their balance sheet. That's a great opportunity. And because, coming out of the pandemic, I think that people are realizing, and we discussed that on the panel, that, looking at the ESG impact approach, then you can go sector specific and go deeper. And that's where, you can allocate capital. For me, that's one of the biggest investment opportunity, in decades, this expansion capital, growth equity, in the wider, let's say, energy transition, impact space, but it's true also on private credit, that I would really highlight that as a focus and opportunity today.
Yeah, so you mentioned the energy transition, that's really interesting. Decarbonising certain sectors, we have the European Green Deal, I think there's a panel later on that. I mean, is that an area where you see real opportunity to make some really interesting new investments? Is it becoming an exciting part of the market, or is it just something you have to do?
No, well, that's a very interesting comment you're making. For some, it has become, a have to do. And, you never do things well when you are forced to do things. We started investing this space, I would say pre-2014, 2015. And so as the trend, has emerged and developed, and even more so as, the various components, it can be a climate, obviously, we'll come back to that, but the social part is increasingly growing. I'm based on the other side of the pond in the US. That's really what people are focusing on. There is a structural and a timing opportunity, because we were saying earlier on the panel, look at the world come to an end, was on pause for a year. Okay, no flights were flying, the industry, the factories were switched off, and yet it only reduced by 5% the greenhouse gas emissions. Meaning that it's not about, going backwards, it's changing by the inside, the way the economy is operating. And that's where we, as capital allocators, as investors, can make a real difference. So very excited about that. Certainly the people who go there because they have to do it, they're going to fail. I mean, you have to do it because you're doing it by design, and it's no longer about an impact theme. The whole industry will have to comply to that.
Yeah, it definitely seems to be something everybody's talking about, taking very seriously, which is good. I don't want to take up too much of your time, so one more question. I just wanted to talk a little bit about SPACs. We've seen a lot of them in the US, a few over here. There's some exciting stuff going on. Do you think we're going to get more coming through the rest of this year and into next year, and in European markets specifically?
I mean, we could talk at length, about SPAC, but let's, step back. What is a SPAC? It's a new technology to deploy capital into a growth equity. It's about helping a private company going public by way of merging these two entities, and yet the families, the founders retaining control, but having access not only to the public market, without the contingency of an IPO, sometimes leveraging the sponsor base of the SPAC, and that's why the sponsors are critical, in the way SPACs are being issued. Obviously, operating partners, as much as it's great to have some movie stars or football stars, leading SPACs. I actually believe that you have to go with people who know what they're doing, in the industry. And so, if you approach that just from a new technology, then effectively it comes down, well, can we use that? And I really believe, with all the excesses that we saw partly in the US over the past few months, that this technology is here to last, because it removes two massive contingents to an IPO. First, the market timing issue, and two, the pricing, the pricing issue. And that, for entrepreneurs, and particularly in Europe, coming back to my, entrepreneurs-led, family-owned businesses who need some long-term expansion capital, this way to access the public market, it's a great opportunity.
Great. Mathieu, thanks very much, and enjoy IPEM.
Thank you.